Hey guys, welcome back to the channel. Jarrett White here with White Ridge Mortgage. If you're looking for a way to supercharge your mortgage, save money on interest, and pay your mortgage down much faster, this video is for you. Today, we're diving into the Manulife One product. This is a mortgage product that is widely misunderstood, and it's something that can be incredibly powerful for homeowners and home buyers all across Canada. In this video, we're going to break it down step by step and explain how it works, what the benefits are, and how can it actually be used in real life situations. But before we get into it, please hit the like button, subscribe to the channel, and ring the bell to be notified. I really do appreciate it, and it does encourage me to make more videos just like this. So first off, let's talk about what Manulife One actually is. It's an all-in-one mortgage and banking solution. Now, most people are familiar with traditional mortgages where you go to the bank, you get a mortgage, and you have monthly payments that incorporate interest and principal every single month, and that's calculated on the balance that you owe. But with Manulife One, it's a lot more flexible and versatile, and here's how it works. The Manulife One combines your mortgage, your checking account, your saving account, and even your line of credit into one account. So unlike a traditional mortgage, all the money that gets deposited into this account instantly reduces the interest that you're paying. So instead of your money sitting in a checking account or a savings account and earning 1% interest, it's instantly going towards lowering your total mortgage balance and saving you a ton of money on interest. Now, the reason why this product is so powerful compared to your standard mortgage is the interest is calculated daily and it is simple interest. It's not compound interest like a traditional mortgage. You always want to keep in mind, compound interest is amazing for when you're investing money, but it's terrible for when you owe money. Simple interest is what you want when you're paying down a mortgage because then the interest isn't front loaded where you're paying majority interest at the beginning of the life of the mortgage and more principal at the end. If you were to look at a chart on the interest being charged, it's completely straight all the way down. Now let's break down the features of the Manulife One product that make it such a game changer. Number one would be the interest savings and debt offset. Every single dollar you put into this account immediately offsets the mortgage balance and the interest costs. What I mean by this is you're going to have every single one of your paychecks from work go into this account to reduce the balance, and therefore you pay less interest on your mortgage balance. But like I mentioned before, it functions just like a checking and savings account, that money is still accessible when you need it, just like the money sitting in your normal checking and savings account as it is right now. Number two, like mentioned before, would be that the interest is simple interest, not compound interest. All the interest being charged on that main account is going to be simple and not compounding. Most traditional mortgage are compound interest where they're front loaded and interest is charged heavier at the beginning rather than the end of the mortgage amortization. This is completely different from how the Manulife One product works with its simple interest. It's calculated daily and it's charged monthly. But just so you know, just because you're getting a higher rate with the Manulife One product, that doesn't mean you're actually paying more interest. It's actually the complete opposite. Due to the simple interest calculation compared to the compound interest, you save much more interest even at a higher rate. And that's one thing a lot of people have a hard time grasping is the fact that they're getting charged a higher interest rate, but they're actually saving more in interest. The third benefit will be flexibility in payments. One amazing thing about this product is it's not like your traditional mortgage where you have a set monthly payment that you have to make. You can choose how you want to pay this mortgage every single month. If you're in a business that is seasonal and you make a lot of money in the summer but not much in the winter, you can use your paychecks to lower your mortgage balance during those good times, and then in the off season when you're making less income, you can actually pull back on those mortgage payments. Because like I said, it's all in one account. You're simply putting all your money into it and then you're accessing it when you need to. And the lower the mortgage balance is, the lower you're paying in interest. However, if you aren't in a position to make the payments at that time due to lower income or maybe you're in between jobs, you are not required to make that payment as long as there's room within the account for the interest to add up. This brings me into the fourth benefit, which is debt capitalizing, which essentially means you're paying for all your debts, your credit cards, your line of credits, your car payments, everything through this account. Now, what this is doing is essentially taking your higher interest debts and lumping it all into that same account, and everything's getting paid for out of that account, and you're only being charged the interest of your Manulife One product. This can be incredibly powerful, especially for things like car loans and lines of credits that have large balances on them. You may as well pay them all out with the Manulife One account, Have that one account for all your income to be deposited into, and you're only paying interest based on that balance. And the fifth benefit I want to discuss is just being able to access your equity. You have a lot of flexibility when it comes to pulling money out of this account. Now, you can use that money for renovations, for investing, which I'll get into later, or let's say you want to buy an investment property. The Manulife One product is going to make that possible by keeping a large portion of your equity accessible. So with that being said, and all those benefits, who is this product actually for? Because to be honest, it's not for everyone, and it could actually be a terrible product for certain types of people. This product is for people that are very strong. They have good income, they have good credit, and they have a positive monthly cash flow. If you are living paycheck to paycheck, this is not the product for you. However, some people think they're living paycheck to paycheck, but they're actually not once they have an assessment done with rolling in all those debts. That's why it's very important to have a talk with a mortgage broker, because you might not think this product is good for you, but it actually could be. But there are actually people that just do not suit this product whatsoever, especially if they had bad spending habits. This can be a very dangerous product to be in. However, if you are strong, you got good credit, good income, and good spending habits, this can be an absolute powerhouse in paying down your mortgage faster and saving hundreds of thousands of dollars in interest. So there you have it. The Manulife One product is a fantastic mortgage product for those that have additional cash flow each month. It allows you to pay your mortgage down faster. It allows you to save money and interest, and it gives you the flexibility to pull from that account as you need and have access to your equity. In my opinion, this product is a no-brainer for anyone that has additional cash flow after paying their normal monthly expenses, what it costs for them to go have fun, pay all their bills and their mortgage. If you still have money left over, it's a no-brainer that you should be putting it in the Manulife One product, because like I said, if you need to, you can even pull that money out for investment purposes and get additional tax strategies there. And for the people that are good income earners, they have good credit, and they're smart with their money, this is what you're really going to like about this product. There's some advanced mortgage strategies you can use with the Manulife One product, particularly when you talk about investing. Now, some of the viewers might be familiar with certain techniques like the Smith maneuver or the debt swap. If you want to see if this could be the right fit for you, like I said, my name is Jarrett White. I run a mortgage team here in BC, Canada called White Ridge Mortgage. But these are advanced mortgage strategies that are very powerful when paired with the Manulife One product. To give you a general outline of how that would work, because you have access to the equity through your Manulife One product, because it's essentially just a checking or savings account as well, you can pull that money out and use it for investment purposes. And if those investments are income generating, so ETFs and dividends, we're part of Dominion Lending Centers, and I would love to have a chat with you about this. This could be for a renewal, it could be to refinance and consolidate some debt at the same time, and it can even be for a purchase. So if you're interested in seeing if this is the right fit for you, be sure to reach out. There'll be a link in the description to book a call, and we'd be happy to chat about it. So I also wanted to take a moment quickly to do a comparison for you with the Manulife One product versus a traditional mortgage. All the interest on those funds being pulled out is 100% tax deductible, and this can be an amazing tax strategy for lowering your taxable income, saving you money, and therefore being able to put that money back towards your mortgage to paying it down faster. If that is something you want to explore, I'm happy to talk about it with you one-on-one with only $1,000 of monthly cash flow. But I'd also recommend having a financial advisor outline what kind of investments you can buy. That means you're earning $1,000 more than what all your mortgage payments plus your monthly bills add up to. And that $1,000 is going into the Manulife One to reduce the balance to save you money and interest. So let's say you were to get a $500,000 home with a $350,000 mortgage with a traditional bank over 25 years. Your monthly payment would be $1,877. Let's say you have total monthly bills. Let's say you have total monthly bills on top of that of about $2,000, because only certain investments qualify to have that interest tax deducted. Now, a lot of people, when they go into this account, what we do is we actually put all the funds from their checking, their savings, their TFSAs into this account right away to lower that mortgage balance. And if you want to buy the investments back, you can, and therefore then be tax deductible. But just having your checking account money and your savings account money go into that account, it's going to start working for you instantly and reducing the amount of interest you're being charged. This is a very simple way to look at banking. It's not having a separate mortgage, a separate checking account, saving account, separate everything. It's all in one big pool being charged simple interest. And then that locked in portion goes into a fixed rate term, just like any other traditional mortgage with a monthly payment, and obviously it has a lower interest rate. Now, with that being said, you can lock in segments of that Manulife One product, which leaves you about $1,200, which is essentially what would be left over in your checking account just sitting there every single month. Now, if you choose to invest that, great, because you could still invest it through the Manulife One product and use one of those advanced mortgage strategies. However, for most people, it just sits in that checking or that savings account because people like to have a cushion, which is super important in my opinion. But when it's in the Manulife One product, it's already there. It's accessible. You can access it if you need it. So even with the traditional mortgage being a full percent lower of an interest rate than the Manulife One simple interest of 5.45, which is prime plus 0.5%, which is where it's currently at right now. It might change by the time you watch this video or by the time you get a mortgage. Having that extra $1,200 go into the mortgage every single month, over the life of your loan with a traditional mortgage, you're going to end up paying $213,000. Now, this would be over the full 25 years. Now, with the Manulife One product, you're going to be paying $147,000. And guess what? The life of your mortgage will be reduced to 15 years. So you're knocking 10 years off your mortgage and you're nearly saving over $100,000 simply by that extra $1,000 going into the account. Obviously, it's going to depend on your spending habits. If you put that money into the account and you take it right back out, it's pretty much going to void any of those additional savings. However, like I said, because it's simple interest and it's calculated daily, every single day that that money is in that account and that account has a lower mortgage balance, you're being charged less interest.